Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to show you guys, of course, the buys that I made last week so that you can start off the week trying to contemplate what positions that you want to go into for this upcoming week. If you are putting in $25 a week, if you're putting money in your tax-free savings account every single week. But again, don't follow me into trades because obviously this is not financial advice and it never will be. It's just for entertainment purposes only. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So we're gonna go through the portfolio, show you the buys I made, update the trackyourdividends.com site, update share site, and then that'll be it. So if you're not new to the channel, this is what we do. So for the day, last week, we closed out at $17,074.34. We were down $239.91, down 1.39%. For the 1 week, we were down $64.21, down 0.37%. For the 1 month, we're down $1,219.46, down 6.67%. For 3 months, we're up $41.12, up 0.24%. For the 1 year, we're down $1,267.88, down 6.91%. And for the all since starting this portfolio, we're up $1,033.39, up 6.44%. As you can see here in the cash account, we have $31.28. And here are the purchases we made. So every single week when we do purchase full shares, we do purchase a fractional portion of the Vanguard S&P 500 ETF, closing out at $95.69, down 96 cents on the day, down 0.99%. This position now holds 10.47% of the portfolio, total position value of $1,784.68. And here is the buy. So you can see we bought $25 worth of this ETF. We were able to get 0.2618 shares at the price of $95.49, which came to a total of $25 Canadian. The next position we bought was the newest position that we have started. And with everything going on, I'm still biased towards the finance sector in Canada. And so we did purchase Brookfield Asset Management, closing out at $42.20. We are currently down on the starting position, but that's okay because that just means we are buying at a discount, in my opinion. So down 59 cents, down 1.38%. We now have 4 shares. Average price of getting in is $43.92, holds 0.99% of the portfolio. Obviously, we are down on the position, but that's okay. Very confident in this sector, very confident in this company. So we bought 2 shares at the price of $42.17, which came to a total of $84.34. And those are the positions of last week that we increased and purchased. And so, yeah, that is that. So we'll head over to trackyourdividends.com and I'll pop that up on the screen here for you. As you can see here, portfolio yield, if you build it today without the updated positions, or if you built this portfolio last week, you would get a yield of roughly 4.19%. Our yield on cost is 4.45%. And currently the annual income from dividends was $708. So when we go ahead and update the positions, again, nothing really changes except for, we'll just go through it. 4.19% portfolio yield if you were to build the exact portfolio with the updated positions last week. Our yield on cost went down from 4.45 to 4.44%, but annual income has increased to $712 for the year, of course, divided quarterly. And that is trackyourdividends.com, completely free to use, not sponsored by them or anything. But it's nice just to keep track of those dividends on an automatic basis. And I know they've done some fixes, I'm pretty sure. So next we'll head over to ShareSite, which I do pay for. And I like to use to show the whole performance of the portfolio, including dividends, including foreign exchange, because we do hold US positions in here. And so with the updated positions, you can see capital gains, we are down $24.73, down 0.15%. Dividends, we received $160.21 roughly, Here we are sitting at a 0.94% gain. And then currency gain, because we do hold a couple US positions in this portfolio, is up $44.10, up 0.26%. And our total performance thus far for the year of 2023, we are up $179.58, up 1.06%. And that is ShareSite. And so when it comes to, these times in economic turmoil where people are imagining that we are, well, not imagining, but still assuming, but very strong assumption that the economy will go into a recession is on the horizon. Some are even thinking that we are going into a depression. Regardless, one or the other, I think when it's a recession, for the most part, and I've yet to prove this to myself, is that dividends typically perform pretty well because you're still getting cash flow from strong companies, mature companies that pay a dividend regardless of how the economy is. Yes, they might pause dividend increase or dividend growth, like we saw in 2020 when the banks were halted to increase dividends at any time until that was lifted, and then they increased their dividends again, but they continued to pay their dividends. I can't say that for other companies though. I know Algonquin, which is a very popular Canadian stock, they cut their dividends, and not completely. I'm pretty sure. I'm not sure because I don't research that company. But there's another example. What was the other one? AT&T in the States was a very popular stock that people tend to talk about because of the high paying dividend, and they cut their dividends. And so when you're building a dividend portfolio, and I'm not one of those people that are dividends are everything and whatsoever. I'm just showing you kind of what entices a lot of investors to start investing in, which is getting a little bit of a thank you in a cash dividend to continue to invest. And so as we saw on the ShareSite, capital gains are down, but what's keeping us afloat in this portfolio continuing to perform are those dividends and a little bit of that currency exchange with holding the US stock. And so I think if we do head into a recession, I'm very excited to see how a dividend portfolio performs firsthand. And so, yeah, that's pretty much it. So just something to think about, some thought, not to be that person that talks about the recession or a depression that everyone keeps maybe bringing up. But hopefully you found something out of this video. Don't forget to leave a like and subscribe, and we'll definitely see you guys in the next one. Bye.